If you've ever tried to trade with moving averages, you know the pain. Set the length short, like a 9 or 10, and it hugs price but whipsaws you on every little wiggle. Make it long, like a 50 or 200, and it looks smooth and professional, but by the time it finally flips, half the move is gone. That is the classic trade-off between lag and noise. Go fast and you get chopped. Go slow and you're always late. The indicator we're breaking down today basically says stop choosing. It's called auto-length moving average plus trend signals by Zeiyerman, and its core idea is simple but powerful. Instead of you picking one static length, it changes its own length in real time. In strong trends, it stretches out and smooths itself. In choppy, uncertain markets, it contracts and sticks close to price so it can react quickly. Think of it as a moving average that breathes with the market. We're going to use it on AUDNZD, 1-hour time frame on TradingView, which is the platform I'm using. If you want the same setup, there's a link in the video description you can use to sign up. Once you're on a clean AUDNZD 1-hour chart, open indicators, type auto-length moving average plus trend signals by Zeiyerman, and add it to your chart. It's an open source script, so if you know Pine script, you can read the full code and documentation right on TradingView. When it loads, you'll see a single dynamic moving average wrapped in a soft band. The color is your first clue. When the line is green, the model is in an uptrend state. When it's red, it's in a downtrend state. When price chops around the line and it fades toward neutral, that's a sideways or uncertain phase. Under the hood, the script is constantly adjusting the length of this moving average. In a strong trend, it stretches it out and smooths out noise and keeps you in the move. In a messy range, it shortens the length to stick closer to price, so reversals and breaks show up faster. Expands in trends, contracts in chop. That's the main engine. On top of the line color, the tool also prints trend signal markers. For a long bias, you want the dynamic moving average to turn green and a bullish trend label to appear. For a bearish bias, you want the line to turn red with a bearish label. The basic usage from the author is very simple. Enter long when the line is green and a trend signal fires, and exit when price closes below the line. Enter short when the line is red and a signal fires, and exit when price closes above it. It's classic trend following, but with an adaptive line instead of a fixed 50 or 200. The part that really makes this indicator stand out is the trend strength table, that small dashboard sitting in the corner of your chart. It gives you 4 key numbers: counter value, trend strength, highest trend score, and average trend score. Together, they tell you how long the current trend has lasted, how strong it is, and whether it's strong or weak compared to recent history. The counter value is basically the age of the trend. It counts how many bars the current trend has been running since the last reset. A low counter, like 10, means the trend is young or the market has been flipping a lot. A very high counter, like a few hundred, means the trend has been persistent for a long time. The script even lets you set a break threshold where, if the counter gets too high, the moving average will reset and contract to become more reactive again. Trend strength is a live score of how powerful the current move is. The script uses its own trend logic to turn slope, direction, and consistency into a single number. A low value points to weak, choppy price action. A high value marks a strong trend. Alone, that's useful, but the table makes it even better by adding 2 more numbers: highest trend score and average trend score. Highest trend score is the strongest reading seen during the session, and average trend score is a rolling average. If your current trend strength is far above the average, you know this move is stronger than normal for this chart. If it's far below the prior high, it could be a sign of exhaustion even if price is still drifting in the same direction. Now, let's look at the settings so you can tune this to how you trade AUDNZD. Under Dynamic MA controls, you'll see base MA length. This is the starting point, the length the line uses in a neutral state before it expands or contracts. On a 1-hour chart, something like 20 is a reasonable anchor, but you can adjust it based on how smooth you want the baseline to be. Right under that, you'll see max dynamic length. This is the ceiling. In a very strong trend, the moving average will stretch longer and longer, but you don't want it stretching to infinity and turning into a flat line. Max dynamic length caps how far it can go, so the tool stays useful. You'll also see trend confirmation length, which controls how many bars are needed before the indicator is willing to call something a confirmed uptrend or downtrend. A longer confirmation length makes it slower to change state, but more stable. A shorter one makes it flip faster. This works together with the adaptive length to decide when a trend is official enough to turn the line green or red. Next are the reset and adaptive conditions. This is where the brain lives. The setting called reset condition type lets you choose what event tells the indicator, okay, the market has changed, reset the trend counter and adjust. The default is slope-based reset, which simply resets when the slope of the moving average flips from up to down or down to up. That suits pure trend followers who want the MA to adapt when price momentum shifts direction. If you switch to RSI-based reset, the counter only resets when RSI crosses into overbought or undersold zones like 80 or 20. That's for traders who care about exhaustion. The system assumes the trend is valid until the market screams stretched. Then it tightens up in expectation of a possible reversal. In volume-based reset, the script waits for a big volume spike relative to average volume. It won't treat every price wiggle as a trend change. It wants heavy participation, which is helpful if you track institutional activity or you trade markets where price is easy to move but volume is harder to fake. Bollinger Band-based reset looks for closes outside the Bollinger Bands. Price ripping far outside the band is treated as a volatility shock and a possible turning point, so the moving average resets to handle the new regime. On top of those, there are other modes like MACD-based resets, stochastic-based resets, CCI-based resets, and momentum-based resets. They all follow the same idea. You pick what you believe defines a trend change: slope, momentum, volatility, volume, or overbought or undersold, and the moving average adapts around that definition. Finally, trend smoothing factor controls how smooth or jagged the line appears while it's doing all this. A higher smoothing factor makes the line more stable, with less jiggle at the cost of some speed. A lower smoothing factor makes the line hug price more closely and react faster, but it may catch more small wiggles. This smoothing is what keeps the visual line from turning into a staircase, even though the math behind it is constantly changing lengths. Now, let's turn this into a simple trading plan for AUDNZD on the 1 hour. For a long setup, step 1 is to wait for the dynamic moving average to turn green and for price to be trading above it. You also want a bullish trend signal marker plotted on your chart. Step 2, glance at the trend strength table. Ideally, trend strength is positive and above or at least near the average trend score. That tells you this isn't just a tiny wiggle, it's a decent move compared to recent action. Step 3, look for a clean pullback toward the moving average band without flipping the color back to red. When you see a candle dip into or near the band and then close strongly to the upside, a bullish engulfing candle or a clear rejection wick, you can enter long. Your stop can go just under the band or under the most recent swing low. For a target, a simple rule is to aim for about 1.5 times your risk, then decide if you want to trail a runner using the line itself as your exit signal. If price closes back below the dynamic moving average, you're out. For a short setup, flip the rules. Wait for the moving average to turn red, with price trading below it and a bearish trend signal printed. Check that trend strength is decent relative to its average, so you're not shorting into a dead sideways market. Then wait for a pullback up toward the band while the line stays red. When a candle pokes into or near the band and then closes strongly down, a bearish engulfing or a long wick rejection from above, you can enter short. Put your stop just above the band or above the recent swing high. Again, a 1.5R take profit is a good starting point. If the move keeps going in your favor, you can trail by exiting when price closes back above the dynamic moving average. Compared to a classic fixed 50 or 200 EMA, the big advantage here is how the line behaves in different regimes. In a strong trend, the auto-length MA stretches out and smooths itself, helping you sit through pullbacks without bailing too early. In a sudden reversal or spike in volatility, it contracts and pulls closer to price, so your exit signal happens nearer to the turning point instead of far below it. When you add the trend strength table, you're not just guessing off feel. You can see how long the trend has lasted and whether its strength is rising or fading compared to normal. This indicator is open source, which means you can inspect every line of code and see exactly how it works. That transparency builds trust, and it also makes this a great learning tool if you're studying adaptive moving averages or trend systems. As always, this is not financial advice. Everything here is for education only. Markets are risky. Before trading, build a full plan that fits your risk tolerance, test it on historical data, forward test it small, and never risk money you can't afford to lose. If you found value in this breakdown, feel free to leave a like, and if you want more deep dives into powerful TradingView tools, consider subscribing so you don't miss the next one. Thanks for watching. See you next time.